that's amazing. But it's something I'm looking for and I can't find this purple one sipping, don't think you should try it. Feel like a ghost stepping on the side. When you getting grunt every day is Friday. See you the most, keep that bitch in private. You want a pill, we gon' add it up. Mess and cap all that shit that we bang it up. Way to the top, now they mad at us. Hit that little thing, now she at it. If he not talking guap, then tell that boy wrap it up. I'm in the spot, with all of the trappers. You know about that bitch shit, that we kick it, bro. I made the pack do a kick flip and land it, bro. Yeah. But you know about it, don't leave. Kick it, bro. Don't leave.
Certified hood classic.
Smell like backwoods. Wake up hearing trap music. Make money, can't fall in love. That's just how you gotta do it. Yeah, if it ain't about the guap, can't do it. Stone cold heart doing drugs with Medusa. Seeing chrome hearts and my dreams getting loose. And shades in the dark cause I'm stuck on Pluto. Yeah, I just gotta keep moving. Bitch, I'm Neo in the Matrix and I rule it. Got a big main road full of blue strips. I just let him copy, I can't teach him how to do this. Yeah, big black 4-5, call it Rufus. Really kick it with my slime cause he ruthless. Look in the Rari and the bitch really ruthless. Talking to the bitch, got that nigga Dr. Doolittle. It's on only baby, no I cannot do.
Going on, guys? I don't know if you guys can hear me. Starting the live stream up. I'm just making sure everything's good, guys. Hold on. Am I not live right now?
Everything I like cause the money not a problem. I be floating through the sky like a diver. Yeah, say you getting high, but I know I'm getting higher. Saying on my tongue, got me rolling like a tire. Gas in my lungs, got me really feeling tired. And the whole house smell like backwoods. Wake up hearing trap music. Make money, can't fall in love. That's just how you gotta do it.
I'm in this bitch with Clay Cole.
Bitch, I got the lights on. Hit her with my ice on. I've been stuck on the road for a long time. And I finally did it, I'm going home. I gotta go get it, I might do some wrong. I'm smoking Superman, bitches is super strong. I hit this bitch once and I just get it gone. Oh, she singing the words like all my songs. She say, lonely, why you treating me wrong? You don't text me back and you don't call my phone. I don't know what's wrong with me, little bitch, I get money. I hit you back when I done.
Alright, guys, I think the stream is all good. Let me just see if I can hear myself. Yeah, alright. Alright, what's going on, guys? It's Matt Fractal. We're doing a live stream today. It's Sunday. Second quarter is about to come up in about, let's see how many days. We got today, and we have a full week. So we have about 8 days until the second quarter. So I'm just gonna go over the dollar index, just the dollar index for today. I don't have that much time, but I want you guys to have some insights going into the new week. So we're gonna start on the monthly chart on this dollar chart. As you guys can see, we've been on a bullish rally with the dollar. Just looking at it from an overall long-term view, the dollar's been going up. But if we refine it and we go into the last 18 months of price action, which we're gonna do right now, we're gonna find the highest high and the lowest low in the last 18 months. So we are in March here. We're gonna go back 18 candlesticks. So 18. We have the highest high here at 114.778, and we have the lowest low here at 99.578. Now on the monthly chart, we have our range. After we get the full range of the 18 months, we need to get the equilibrium price point. So we need to grab the high and the low and then find the mean threshold, the mean price. So let's do that now. grab this little box here. And now we have the gradients. We have the 25, the 50, and the 75. So for this presentation, I'm just going to mark out the 50 just to show you the equilibrium in price. Sorry. So just with these 3 price levels on the chart on the monthly, it gives you a perspective that we have an equilibrium price point. Anything below equilibrium is usually a discounted price. If the music is too loud, guys, just let me know in the comments. But if it's not, just let me know if it's fine. But I'll still turn it down. I got Lonely playing right now. But yeah. So having these 3 price levels already puts you in a perspective like anything below the equilibrium price point will be a discounted price. Anything above it would be a premium. In trading, the goal is to buy low and sell high. Buying low is considered buying at a discount price. When you go to the store, you're not looking to buy a blouse or a shirt for the highest price. You would love to get it on a discounted price. So just like in markets, just like at the store, you want to get in at a discounted price, and a discounted price is below the equilibrium price point. That's all I have to say. If you want to offset your buy position that you bought in a discount, you don't want to offset it still in a discount. If you're trying to sell something to somebody, why would you sell it to them for cheaper than you got it? You want to sell it to them at a higher price, which is a premium price. So what I can see, the dollar is in a discounted price. We made a low here in July and we rallied. Look at this break in structure here. We have these 2 swing highs here. We broke it. We rallied to the equilibrium and now we traded lower. From this low to this high, I'm seeing a swing, potential swing. So I'm gonna just put it in. So we have the low, the high, and as I told you guys, under the equilibrium, we're looking to buy in a discount. So from low to high, price trades down into a discounted price. That's 62% to the 79% fib retracement. Trades into it, and now we're starting to see some institutions buy up the dollar. Right? So if we're buying up the dollar for the last 3 weeks, or the last 3 months, sorry, where do you think the smart money would want to offset these prices if they're in the buys right now? The way I'm looking at it, as I said before, they're going to offset it into a premium price, and premium is above equilibrium. So I'm going to look above equilibrium price, which is at 107.174, and I'm going to look up and look at the PD arrays, the premium discount arrays that's in price. So above this price, I see this fair value gap here, and I see this order block. So an order block with a fair value gap makes it way more high probability for either a draw on price. A draw on price is like right now, price is drawing up, or for a reversal. So if price goes here to this price level, there can be a potential reversal. But since we're in a discount, I'm looking for a draw above the equilibrium, so I'm going to draw this price out here, the order block. I'm going to draw the low and the opening price. So let me really get the details. This is March here. So remember, in trading, the first thing you need to do, find out if you're in a premium or a discount price. If you're in discount and price is going up, that means that it's high probability that it's going to go into a premium price. So now you have to find where was that last discounted price bought by smart money. Let me give you an example. This low took out these swing lows here, and it continued to rally. So at this moment in time, July, when we took out these swing lows, the next 3 months we could potentially see buying opportunities, which we did. March right now, the month that we're in right now, we opened and we traded lower. Where did we trade lower into? We traded lower into this order block created back in December. Let me grab my levels here. I'm gonna draw the gradients out. Get a better level. So I'm really focusing on this December down close candle because the candle got broken in February. Then March we opened, we traded lower below February's low into December order block, and now we're rallying higher. So I'm just gonna draw out these the levels. We have the opening price here. I'm gonna make this blue, and then we had the mean threshold, which is here, the 50. As you can see, it didn't really hit the 50, but we'll see. We took out February's low into the order block, and now we're rallying higher. On a short-term perspective, inside of the discounted price, we have this order block here that was created on October 2023. So that is a short-term drawn price. So I'll draw that. But we're not looking for any reversal patterns because this price is still in a discount. We want to see it blast through it. So let me just draw that out as red. Okay, so this is exactly how this is all you really need for the monthly. Find out your 18-month range, get the equilibrium price point, and then draw out your PD arrays, the discounts, the discount arrays in the discount, and then the premium arrays in the premium. And then you go down to the weekly chart, which I'll do right now. Weekly chart. Now this is how it looks here. Boom. These levels here, these two levels, are the monthly order block that I drew out. And the weekly chart, as you can see, we broke above this old high here. So let me draw this out. This is a shift in the structure. This is a shift in the market structure here. So we rallied above these highs. We made a retracement. However, if we grab this low to this high after we broke the market structure, a Fibonacci, high, below, right? We went below the 50% at 102,800, right? But we did not come into the optimal trade entry, which is the 62 to the 79%, right? So with that being said, we need to grab the bodies of the candles and see that reading. All right. If I grab the bodies, this body and this body, the wicks, they do the damage, but the bodies tell the story. As you can see, we have a cleaner reading now. Price traded down into the 62% at 102,450 on this order block here on the week of January 8th. We traded lower into the 62, and now we're starting to rally. So a lot of people would get confused if they grab the actual high and actual low to high. They're not going to get that reading of a optimal trade entry into the discount price. That's how sometimes the market tries to trick you. So you need to be marking out your swings using the wicks and the bodies just to get your correct reading. So now we traded lower into this order block here. It's created in January 8th, the week of January 8th, and then the last 2 weeks we had bullish runs. Even last week we opened here, we traded lower onto that monthly order block price. Let me see the exact price. 103.355. We opened, we traded there. They picked up a discount again, the smart money, and then the weekly candle, as you can see, we had a upward expansion. So now going into this week. And as you see the title, we're wondering, is the dollar gonna go bullish for the second quarter of the year? And my answer would be yes. It actually potentially can go bullish. I'm more leaning towards a bullish dollar than a bearish dollar. However, being a smart money trader, you need to be nimble and you need to be you have to be very adaptive. If you see something next week or 2 weeks from now, but your bias was bullish on dollar for the next 4 to 8 weeks, but you see something different, we trade up into a premium price, we trade up into a bearish order block, a bearish fair value gap. Are you still going to be thinking, hey, we're going to be going bullish for the next 4-8 weeks? Maybe, but you also have to know that there's a potential that price can reverse from this area. So either liquidate your positions, use smaller risk, or just wait until the next wait for the next buy setup to form. Right? So next week I'm looking for a bullish week actually. So we're gonna run this high here, this swing high created on February, the week of February 12th. We're gonna run this swing high into this mean threshold of this order block on November 6th. That's my weekly range for this week. We're gonna open, either trade lower onto here. Let me show you. This order block, this last 3 down close candles, it's a valid order block now because we traded through. I'm gonna make this blue. So we can open, trade lower onto the order block, and then rally to grab this old high back here. That's what I'm looking for. The only thing that will change my bias going into the week is if we create the high of the week on this consequent encroachment of this wick right here. That's basically just the 50% of this wick. So I'm gonna draw that out. But as I said, guys, on the monthly, these levels here, they should be just blasted through because we still have this monthly premium level all the way in the premium 18-month range. So these levels, of course, they need to be marked out for the intra week. But longer term, we're looking to get up into this this fair value gap. And that's my alarm. It's 1 p.m. Sorry, guys. Let me just wrap this up on the stream. It's my first stream back, guys. We're gonna be super consistent. I have a lot of things coming for you guys. The Liquid Asset Institute. We're bringing a lot of things coming. We have a lot of members joining. We're sending charts. We're sending analysis. We're sticking to our routine. We're sticking to our regiment. We're staying healthy. The Liquid Asset is coming, guys. Don't worry. The website, my course, everything is coming. Just be patient. And the guys that were here with me before I started everything, you guys are gonna have premium access because you guys believed in me from the beginning. But yeah, let me just show you the Telegram real quick, guys. Join the Liquid Asset Institute. All we do is trade every week. We look at the market. We try to find a few trades per week. We execute, and we live our life, guys. So join the Liquid Asset Institute. Hit me up in Telegram if you need help with anything, if you need me to answer any questions. And yeah, let's get back into the charts. We're gonna wrap this up. But yeah, we're bullish next week for the dollar. We have these levels here. We have mean threshold, old high, and then this order block back here. All right, so now let's go to the daily. The daily is going to be the last time frame we have to look at. All right, so this is how it looks on the daily. So we created a low late 2023, and we have rallied for the past 2 months. So from January, or from late December to mid-February, we rallied. We had a retracement after we broke the structure, which is obviously expected. Once price goes above swing highs and swing lows, they usually try to either reverse, retrace, or consolidate. So here we had a retracement profile. We retraced for the next 2 weeks, right? So people were trying to get a lot of shorts going on right here. Look how many candles it took for this retracement. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Almost 20 candles it took to get this retracement. Now, once we took these old lows and we ran into the discount price, I'm going to draw this out because this is a volume imbalance here, just so you guys can see the price action. Right? We took these swing lows, we traded down into the volume imbalance inside of the higher time frame order block, the monthly. And then look how many candles it took just to catch back up into this range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. So 20 and 11. This looks like a ICT market maker buy model. So now on the daily chart, you're looking at buy models and sell models. What model am I in? Well, when we made the low here on March 8th, inside of the volume imbalance, the bullish volume imbalance, if you go back to the highest high in the range, which is here, back in Tuesday, February 13th, or around Valentine's Day. So now we're in a buy model. So every down candle in this model on the buy side of the curve after the 8th should be a buying opportunity. So we had one right here, down close, you draw it out in time. On Thursday we came lower and we bought up for Thursday and Friday. Those 2 days, those are the 2 days that me personally, my trading model is looking for. Right? So we're looking at a bullish dollar for next week. Let me map out the weekly profile and then I'm gonna end the stream. So Monday is usually a lackluster day. So let's look at the Forex Factory. Monday we're having news at 10. Tuesday we have news at 10 a.m. 8:30. So I'm really looking at the red folder, guys. So Tuesday we're gonna have a big move at 10 a.m. So I'm gonna be up for 10 a.m. Wednesday we're gonna have a move at 6 p.m. I'm not gonna be home at 6 p.m. So Wednesday, I already know I shouldn't be trading on Wednesday. Thursday is gonna be our best day for this week. We have news at 8:30, red folder, unemployment claims. Thursday we're gonna be locked in for the New York session, and then Friday we're gonna lower the risk on Friday because Fridays, you know, they're risky. Fridays can be risky days, so we're gonna just lower the risk at 8:30. So with that being said, if Thursday looks like it's going to be our big day, we can probably look either for a Thursday low of the week or Thursday high of the week. But we can't forget that Tuesday makes the high or the low of the week 70% of the time. So we'll be watching for the low or the high of the week on Tuesday at 10 a.m. Right? So if that's the case, where is our PD arrays on the daily chart? We have this order block here, right? We have this order block here. So we can have Monday open here, trade lower, and then Tuesday pick up a discount on the order block, make the low of the week, and then rally to complete the full market maker buy model, right? Because this order block here is the only clean discount price that I can see at the moment. So why try to make it so difficult? If it's only one level, just mark out the one level and wait for it to get hit. This can potentially be the low of the week for this upcoming week. As you can see last week, we traded down into a order block, but more importantly, this fair value gap, right? And the monthly order block level here. Let me get the Pacific at 103.355 exactly. So we have the fair value gap here. So Thursday, look at this. Monday, Tuesday, Wednesday. Thursday makes the low of the week. So once the low of the week is formed, we can obviously look for buys on Thursday and Friday, which you can see happened. So next week we look for the same exact thing. We look for either the high or the low to be formed, which I think is going to be the low of the week because we're bullish on the dollar. So you're gonna open, make the low first, on Tuesday or Wednesday or Thursday, and then we need to rally to create the expansion for the week. So I'm looking at a Tuesday low of the week at 10 a.m. and then a big expansion on Thursday to clear out these highs for the market maker buy model. So guys, that's going to be it. Take a screenshot of these levels. I'll have them for the upcoming week. I won't touch them, and we'll see how the market gyrates through these levels, through the levels that I just created. All right, so guys, that was a first video back. I had to put down my mental blocks and come back to YouTube. I hope you guys enjoyed, and I'm gonna see you guys tomorrow. We're gonna do a video tomorrow on how Monday trades. All right, you guys have a great day, and yeah, Matt Fractal out.